Money Live. We are so glad that you are here with us today to talk about a very important topic. Before we do, really quick, just have to do a shout out. Barbara Bush, woohoo! Love that lady. Had to wear the pearls today. We should probably all be wearing our pearls, ladies, as a shout out to her. So love that lady. What a wonderful life. What a wonderful woman. What a wonderful marriage that her and her husband have, wouldn't you say? Very, very cool. Well, we're going to dive in today. We are kind of expanding on Financial Literacy Month, about the most boring title that you can think of.
I'm struggling
so
with this month.
Yeah, I know. Financial literacy is not the best way, but we do all want to be financial literate,
Absolutely.
right? And that's what we're going to do today is
Absolutely.
actually help in the whole area of credit and credit cards and debt and all of that. So we're going to give you some tips today. We're really excited to share with you. We love thumbs up. We love hearts around and flying in the air. So give us some love. And if you have any questions, let us know. Any comments, please give them to us. We love to hear them.
Yeah,
and
let's dive
even
in.
if you want to shout out to Barbara, go ahead, do it here right on Love Money Live. So again, we're glad you're here. All right,
Yeah,
so we're
absolutely.
going to dive right in?
Then dive right in.
Okay.
So the first thing that we want to talk about, we're going to kind of split up two things today. Credit and debt and
Right.
what those look like. So first of all, I want to talk a little bit about what is a credit score and is there more than one? And there's definitely more than one, but the reality is most of us use the FICO scores to determine what our credit is. So I want to go over this. If it ranges from 300, really bad, to 850, you're a rock star. And so what I tell people, 800 and above is what they would refer to as excellent. Between 700 and 800 is good. I mean, that's a good solid credit score. You're gonna, it's gonna help you get a house if you were maybe financing a car. That's really good. Between 6 and 750, okay, so between 6 and 750 is fair. I mean, you're not bad, but you're not great.
Yeah.
Then what we talk about is, it kind of depends who you're using, but between 600 to 580 to about 650 is not so good.
Oh, wait.
It's not terrible. Okay, so let me read these because I want to make sure I got them right.
Okay.
So 800 above is excellent.
Yep.
700 or above is good.
Okay.
Between 600 and 750 is what they call pretty good.
Yeah.
Medium. Between 600 and 550-ish is kind of below. Anything below 550, they're going to say is poor.
Yeah.
So you want to just know what your credit score is. You can always go get one free copy pretty much from anybody per year. So check it out every year. But one of the things that
Well, that's a question a lot of people ask us. How often should you pull your credit score?
I think every 6 months.
6 months?
I think you
Yep.
can, I think the reality is that it takes your creditors time to catch up on what they're documenting as far as your credit. So it can swing pretty dramatically in a 6-month period, especially if you're paying off a bunch of debt. And so that brings us to the next question. Why is good credit so important? Well, it's important because everybody's looking at it. And if you're going to do a major purchase, you've got to have good credit.
It's so funny. Today I was talking to Shiloh, and I was just saying, it's like if you want to be like hidden, it's almost literally impossible.
Yeah.
Isn't it?
Yeah, it's hard to go off the grid.
Companies know your credit scores.
They know your credit scores. They know what you're buying.
Yeah,
so
exactly.
It's good to get a good credit score because it's going to help you finance anything. Now, what hurts my credit? Late payments, first of all.
That's
if
probably
you
the
have
biggest.
late payments, you are going to get slobber knocked. Now, that doesn't mean that if you went on vacation and somehow you missed a credit card statement. We've all done that. And maybe you're paying 2 weeks later that, oh my gosh, my credit just did a nosedive. Absolutely not. Basically, if you're a month or more late, it's going to get reported. And so medical bills are huge. If you get really far behind in medical bills, that crashes your credit.
Okay, so here's a tip, because we've had a lot of medical in our life. You call medical bills in our life,
Yep.
with me with cancer and all that kind of stuff. But if you call the medical company, they work so well with you. It is unbelievable. So a lot of times people just kind of duck and hide and want to put their head in the sand when it comes to any creditors calling them or whatever. But it's super important to get ahead of it call them before they call you, and they will work with you.
Absolutely.
It's huge.
Now, I'm going to tell you one of the biggest mistakes people make trying to get their credit better. And this is it. They pay off a credit card and then they cancel it.
Oh, don't do it.
Terrible idea.
Don't
because
cancel
one of the
credit
major
cards.
factors.
Unless they have super high annual fees.
Right.
I mean,
usually it's interest
credit.
rate. Usually the annual fees, you can call them and waive an annual fee.
Yes, sir.
But so the interest rate might be high, but who cares if you're paying it down to zero every month, which should be the goal. The reason that you get hosed is if you have credit and then you pay everything off and then you cancel those credit cards, is that the way that they determine a good credit score is how much available credit you have. So I know a lot of financial advisors say, get out of debt, get out of debt, get out of debt. Totally agree.
Yeah.
But don't make the mistake of canceling that credit card right away. Let it go for 6 months. Let it go for 12 months. Just don't put any more money on it, because and then cancel it later. But that's going to give you that really, really strong score. So how do you make it better? You pay it off and you keep it off for at least 6 to 12 months.
They like to see you have available credit, but then the balances are low.
Which is so weird because, and we've dealt with, we had a young couple that we were working with that said, we're never going to have credit cards. We're never going to have credit cards. They did everything off cash cards. They couldn't get approved for a house. Why? Because they had no credit.
He literally opened a credit card so he could
get good credit to buy a house, and they did it 12 months later. But I understand it's backwards. I understand we all want to be debt-free and all that great stuff, and I'll scream I'm debt-free if you want me to. But the reality is that when you get debt-free, don't cancel the credit card or you're going to trash your credit. Sorry, that's just the way that it is. So that's how you get good credit. A lot of times when people pay off their houses, those long-term payments, pay off cars, long-term payments when you pay them off, that's how your credit score gets good, because you made those payments on a regular basis and you have a lot of available credit.
Now, a lot of people ask, honey, they say, like, okay, so I have bad credit score now. How do I get it up?
Well, you get it up by paying down as much as you can, as quickly as you can.
By keeping that credit there.
And then keeping that line of credit open.
Yep.
That's the most important.
Yep.
That's how you're going to improve it.
If you are newly getting married soon, make sure that from the very beginning that you make a 100% commitment to making those payments.
Absolutely.
I mean, on time.
And one of the big things that kills and crushes newlywed couples is not knowing what the other person has as far as credit card debt and student loans and some of those. So make sure, if you're taking your relationship to the next level, that you're talking about what debt you have and what credit debt you have, and look at each other's scores. It's not a deal breaker, but you have to go in eyes wide open.
Yeah, but I will tell you, if someone's afraid to talk about that,
run.
Run as fast as you can from that person, because money impacts the relationship every day. Whether we want to admit it or not, it does. So if you have a person who doesn't even want you to see their credit score, doesn't want you to know how much they make,
you got a problem.
Doesn't want you to know that they have any credit card debt or school debt or anything, I'm telling you, run as fast as you can. That is not a mature enough person to get married. Super duper important. Now, one thing a lot of people ask us about credit cards is, they say, we don't agree as a couple about how much is too much and all that kind of stuff. Super important to agree on what's enough. Let's say Scott thinks that it's okay to have a $5,000 amount on his credit card, and I would say none is okay.
Right.
Then you're going to have to compromise somewhere.
Right.
Now, you can look at the money side of it forever, and the money side says make sure you pay those off every single month. But the relationship side, save the relationship first. If you have to make a compromise there, then make a compromise.
Right.
It's super important not to fight over money.
And it's okay to compromise.
It is okay. It is,
especially when you're trying to get out of debt.
Yes.
So when it comes to your debt, one of the biggest goals is just to get it out on the table as a couple.
Yeah.
Just make sure that it's all out there so there's no more surprises. How much do we have? Look at the interest rates. I can't tell you, how many times in our married lives we've said, we just got an offer for like a 3% interest rate and we're paying 6 1/4. Let's switch cards. That's an okay thing to do, to bring those interest rates down.
Now, a lot of times people say, how do we, let's say we have 5 different credit cards and we're trying to pay them off, and which one should we pay off easy? Okay, so there's 2 answers to that. 1, there's a financial answer, and 2, there's an emotional answer. The financial answer says make sure you pay off the highest interest rates
Amen.
first, But the emotional side may say, you know what, I've got this little one over here. I know it's not a very high interest rate. I just want to get it out of the way to make me feel better. So, you've got to weigh it. You've got to weigh it. But again, the financial answer is to just say, say pay the highest interest rates off first.
Absolutely. That makes the most sense. That's going to save you the most money over time.
Yes.
I think that's such a great point. We have so many clients that we sat down with where they're just like, we're just going to get rid of this $2,500 one so I can just take it off the table.
And feel better about it.
And feel better about it.
Yeah.
Maybe it was a bad debt. Maybe you racked it up in an emergency and just emotionally let it go.
Now, what about those risk takers, honey, who say, a little bit of leverage isn't too bad. A little bit of debt isn't too bad.
I don't have a problem with that because having started, how many businesses have we started over the years?
4.
4?
Uh-huh.
We've had times where we've had to leverage. And here's a really cool thing.
Well, we've done a lot of investing. We've started 3 businesses.
Right. But we have borrowed money in the past. And now is a great time to do it because interest rates are so low. So if you haven't refinanced your house in the last 5 years, go do it today. If you are looking at starting a business and you're looking for a line of credit to help you with that business, get it today because we know interest rates are going up. And the interest rates at banks are still really, historically, we are like super duper low. So when you think of credit card debt is one thing, but other kinds of debt, your mortgage to your house, maybe a line of credit at the bank for a business. Those work a little differently because they're lower interest rates and they're going to help you hopefully make some money. And for your house, you're going to build equity. You're going to build equity in your house by paying that off monthly. So just know the difference when you're looking at eliminating debt. Always start with credit card debt first and eliminate the other debts later.
Okay, so now what about those spenders, the flyers? You know, we've got 5 money personalities. Everybody's got 2. Make sure you know your 2 money personalities. But if they have either spender, flyer, or risk taker as part of their makeup, what happens if the spouse is a saver security seeker and is like, we are not going to start a business under any circumstances ever, and we're not going to be getting a line of credit? You
have to compromise because most businesses need a line of credit to make it happen. And
not all,
but most. So you do have to kind of weigh that. You do. I don't think.
Do the research. You know, security seekers need that research. You know, prove to me that this business. I mean, of course, there's always in startups. There's always a risk. Very, very few companies make it past 3 years. But you know, make sure you do the research for that person to make sure that they understand what the opportunity is as well. And you got to weigh it.
And you do have to weigh it. And you have to compromise. If you're a security seeker saver and you never let your risk taker spender significant other start businesses or do what's going to make them happy, your relationship's done. I mean, just
after a while,
they're going to give up and they're just going to leave you pretty much. So you do need to open up some flexibility to those risk takers and to those spenders to make sure that if they are trying to pursue a dream, you're going to have to know there's money. And I'll tell you, there's never a good time to start a business. There's never the perfect time to start anything that you're passionate about if you're always waiting to have enough money in the bank, because who even knows what that means. But now's a good time to borrow money to do these things because interest rates are really low, and we know they're going to go up because they've already promised that they're going to go up as much as 0.5% this calendar year.
We always say too, you know, if you're going to start a business and you're going to get a line of credit, make sure that it's not something that's going to just absolutely kill you if it doesn't work out.
Right.
You know what I mean? So really
take some calculated risks.
Calculated risks are really good risks for risk takers, and so go for it.
Yeah,
all right.
Enjoy.
Great.
So credit cards, let's get rid of them. Let's get all that high interest behind us. At the same time, if you're looking at improving your credit, don't close them the next day because it won't be good. You'll be like, hey, how did my credit rating go down? We have no debt. Well, that's the reason why. When it comes to debt, it's a good time to borrow because interest rates are low, and it's a good time to refinance that house if you haven't already done that in the last couple of years.
And calculated risks are always okay.
Absolutely.
All right. Okay, so before we leave, we just wanted to share with you, we're so excited about the launching of our new website. Here it is, so you can see it, all right, at themoneycouple.com. We want to give you, I think we have a whole bunch of goodies on here that are free, especially for your saver security seekers.
Awesome.
But really great information. One I wanted to tell you about today is if you go to our website and then underneath the part that says resources, click on that. So let me just show you. So resources, and then go down to savings. And if you go on there and then you scroll down, I should say, You can see some videos from yours truly. But in addition to that, we also have some saving calculators, which are really great. You know, there's tons of saving calculators out there, but we found a couple that we really, really like. So get those. And then we have an infographic, 10 ways to save. Really, really great. Hey, we just heard from somebody that we had a spelling error on it. So we fixed it.
We're working on it.
There
Sorry.
we go. We know we fixed it. It's all fixed.
Fix it.
Yes, woohoo. So download that 10 ways to save. But check out our new website. Also, one thing I will tell you too, down in the right-hand corner is this little guy, this smiley guy. That is a place for you to give us any feedback, ask any questions. We'd love to hear from you. And we're just really excited to be able to bring your love and money together in so many different ways. We've got new Money and Me blueprints. I mean, it's just loaded and loaded with lots of great resources. So go ahead, sign up today. Great being with you today and Love Money Live. We're so glad you were here. Financial Literacy Month. Woot, woot. And so we'll continue next week. But if you have any questions, let us know. Comments, please do. And we'll see you next week. And as always, make it happen.